Good morning, everyone. I want to welcome you to our weekly call around resources and opportunity to help you navigate this interesting time with COVID-19. We're very fortunate today to have some incredible resources here to talk with you and answer your questions from our Small Business Development Center from the University of Georgia. We've got the area director, Ruby Riesinger, and we've got Mark Collier. They represent the DeKalb County and Rockdale County. Again, Ruby is the area director and Mark is a business consultant. Let me tell you, we have had a strong partnership with SBDC because of their experience and knowledge and what they bring to the table to helping small businesses grow. Today, we're going to focus obviously on the Small Business Administration Emergency Loan Overview, but more importantly, we want to make sure any questions, anything you are unsure of, this is the time. It's important that all of you are successful and you have the information and resources you need to continue your business to grow and thrive. And so with that, I'm going to turn it over to Ruby. If you could go ahead and kick it off with an overview of the programs, and then we're going to open it up for questions, some of those that we've received, and questions from our callers.
Okay, thank you, Stacy, so much. We do appreciate the Georgia Minority Supplier Development Council. And I also want to mention we have our colleague Carolina Ramon with us. Carolina, can you say hi? Maybe she's not listening.
Good morning, everyone. I'm here. Good morning, everyone. Thank you, Ruby.
Carolina is the director of the Office of Minority Business Development for the entire state. And it's good to have her here because Mark and I have run in the DeKalb Rockdale area, but she covers the entire state. And Mark Collier and I work together on a number of different things. We may have met with some of your businesses there on strategic planning. He does a really good job with that. We are actually if I could say a little bit about the Georgia SBDC, if you haven't heard of us before, the University of Georgia SBDC is actually 17 counties across the state of Georgia, and we're a resource partner of the SBA, but we're not the SBA. We're University of Georgia faculty, and we actually all have MBAs or higher in education and 5 years of small business expertise. And Mark actually came from SBA. Mark, you want to say hello?
Good morning, everyone. It's a pleasure to be here and hopefully get some answers to all the questions that are surrounding the SBA disaster loan programs. Yes, this is my second time around with a disaster. I have previous experience with the SBA in their disaster assistance office. So that relevant experience bodes well for what we are going through today. And I look forward to contributing some relevant content on the questions that we receive. Thanks, Ruby.
So we're all here to help you, and we want to make sure that you get the assistance that you need and have a chance to answer any questions that we have during this broadcast. And also, I would like to direct you to our website, and that's www.georgia, spelled out Georgia, SBDC.org. We have a list of the different webinars that we've done across the state, and each one of those we've had question and answer series during the actual broadcast and then afterwards. And we answered all of those questions and posted all of those different webinar question and answers on that website. So it's a good thing to go check it out. I'll be sure and send Emily the link to it so she can send that link to you as well. But if you want to just go check those out, I'm telling you, if you can think of a question, they've answered it at some point. So with the Small Business Administration Emergency Loan Overview, we like to cover everything that there is out there, but depending on what it is that you actually need and where you are with your business, what kind of funding you've gotten in the past, there's different ways to help you. There is assistance, and it comes from the CARES Act, and it comes from the SBA and the Treasury. They're trying to help you stay in business, help you through the hard times, and there's different avenues, different loan mechanisms that you may qualify for, that you may find are a better fit for you. We're going to kind of go through all of those. So if we could go to the next slide. Okay, so here we are in the state of Georgia with the little map there that shows all the different offices. You can see that we go up as far as Rome and even Gainesville, over to Savannah, Macon there in the middle, Columbus down midways on the left-hand side, all the way down to Valdosta. So some of the offices cover a lot more counties than others. It really goes more by population. We have 5 metro offices that you can see there in the middle. We have one at Kennesaw State, one at Georgia State, one at Clayton State, one in Gwinnett, and then our office here in DeKalb. We work every county in Georgia, and we make sure that we reach out and do a number of low-cost training programs, and we also offer one-on-one business consulting absolutely free. Of course, we're partners with Georgia Minority Supplier Development Council, so in addition to having all of these offices, we do a lot of programs remotely and through the different organizations and partnerships that we have. Next slide. Okay, so the disaster loan programs that are most relevant for the small business owner, we're starting with the SBA Guaranteed Loan Payment Relief. So if you have an existing SBA loan, that would be a loan that you got through the bank but backed by the SBA, whether it's a 7A or a 504 or a microloan, they're offering relief to you. In relief in what way, you're asking? Well, it may be difficult right now for you to make payments. So the SBA is actually relieving you of those payments for the next 6 months. They're actually going to make your principal and loan payment for the next 6 months, as long as you're not in deferment. If you are in deferment, meaning that you have postponed making payments, then if you come out of that in the next few months, let's say you're on a 6-month deferment. So in 6 months from now, when you come out of that deferment, then they're going to actually give you 6 months that they'll take care of the payments, which would mean that you would be covered for a year if you were deferred now for 6 months. So that's something to look into. Of course, I would check it out at sba.gov and see how it could affect me and my business. If you could mute, that would be awesome. If you want to go back to that other slide, I was just asking whoever that was to mute. So the second one is the Economic Injury Disaster Loan, EIDL, and the EIDL Advance. Everyone's heard of that. That one got a lot of press and a lot of actual rumors and misconceptions going around about the EIDL Advance. And the Paycheck Protection Program, PPP, and the Emergency Bridge Loan, EBL. Okay, so next slide. So the SBA, as I mentioned, will pay the principal, interest, and any associated fees owed on the SBA guaranteed loans for 6 months. So if you're in deferment, it would start after you come off of deferment. But if you're not on deferment, it begins with the next payment. For a new borrower, beginning with the first payment due on the loan, but only for the new loans made within the next 6 months, starting from the date of enactment. They're not actually making new loans right this minute, but I am guessing they're about to, as far as SBA Guaranteed Loan Program, because the verbiage reads from now until September that you would be able to participate in this. So I'm assuming that means that they're going to make some in a little bit. I think they've been really focused on trying to get out disaster relief loan money first, but they are planning on deferring that if you need it, not deferring it, but making the payments on that as long as you're out of deferment. Mark, do you have anything to add to that?
No, I think that is a phenomenal benefit to these programs, because the entire goal of this program is to help businesses remain on their feet and free up cash flow, so that hopefully with 6 months to a year down the line, this pandemic will be behind us and businesses will hopefully be able to recover. But I think the payment deferment is a critical piece of these relief programs, and I think they're going to serve businesses well.
Thank you. So next slide. So now let's talk about the Economic Injury Disaster Loan, or EIDL, as many people are calling it. To be eligible, you have to be a U.S. business. You have to be owned in the U.S. Businesses with 500 employees or fewer There's actually a couple of different cases that the 500 or 500 employees or fewer does not apply. I would ask you to check with SBA.gov size, because it depends on the industry that you're in. They also look at revenues and stuff, but you can check out very easily if you are qualified to meet what the standards would be for a small business. It's up to $2 million to be able to help provide financial obligation, relief and operating expenses that could have been met if the disaster hadn't occurred. It's like working capital. So anything that costs you money to run your business, this is what they're really kind of focusing on. And in fact, the information that they ask you for is your total revenues for 2019 and your cost of goods sold. And then they look at probably your operating costs are about the same for this year as they were last year, if not just a little bit more. But your revenues have been affected. So therefore, you've got all those operating expenses that you can't cover now that you used to be able to cover with your revenues. And that is actually where they're trying to concentrate for this particular help. It could be capped at $15,000 plus the advance of up to $10,000 for 8 weeks. The loans are based on credit scores. One thing we always remind people is please do unlock your credit if you're going to apply for this, because the credit score does matter. And if you're locked and they can't check it, that's going to hold you back. The interest rate on this is 3.75. It's up to 30 years. So this loan is something that really could help you get over the hump and concentrate on paying your operating costs until your revenues get back up to where they should be. And the cool thing is the first 12 payments are deferred. You don't have to pay them. They're not due until 1 year after the original disbursement date. The interest does accrue, but you still don't have to make a payment until a year from now. So it just depending on what it is that you're using it for, it may be relatively easy for you to get back on track, and it gives you a long time to pay back. Anything to add on that, Mark?
Yes, just on the underwriting portion, yes, credit scores, I'm glad you gave the advice to unfreeze your credit. But in terms of underwriting the amount of the loan that they will approve, it's going to be based on the historical cash flow of the business. So they'll be taking a good look at that in terms of what the cash flow has been on the business historically, in terms of approving the amount of the loan. But that's all I need to add.
So something I will say, I've had people ask me questions on that of what if I don't have any cash flow? Well, if you don't have cash flow, it's going to be really hard to loan you on your cash flow, right? And if you don't have records of that, again, you're going to be in a world of hurt trying to prove what is it that you used to make, because records are key. Records are key in all of this. You're going to have to keep really good records after you get the loan as well. Let's go to the next slide. Okay, so the EIDL or EIDL advance that people have been hearing about, as you apply for the Economic Injury Disaster Loan at SBA.gov, one of the last questions on the third pages is, would you like to, or click here if you would like immediate assistance up to $10,000. People were calling it a grant. People were calling it a $10,000 boost, but it turns out it's up to $10,000 as the verbiage, and it's really based on how many W-2 employees that you have in your company. So it's $1,000 per W-2 employee, not your independent contractors. They can apply themselves because they are basically a business entity unto themselves. And also to prevent double dipping and possible fraud, you can only apply for the W-2 employees of your company. It's up to a max of $10,000. It's provided within 2 to 3 weeks of applying for the loan. You don't have to repay the advance. So let's say you apply for the EIDL and you're denied for some reason, but they give you the up to $10,000 advance, so you get to keep that. It's forgiven. It's not even going to show up with any kind of a tax form at the end of the year and be counted as revenue. So funds can be used to provide paid sick leave to employees, maintain payroll, meet increased production costs due to supply chain disruptions, or pay business obligations, including debts, rent, mortgage payments, and more. There's a full list at SBA.gov. I will tell you that the eligibility there, it's available to small businesses and everybody that is a business, depending on how big your business is and how many employees you have, as to whether or not you would apply for yourself or as part of a company. Most businesses, I would say the independent contractors had the most questions about it because they're small entities and they thought, well, I may be included in this other particular company. You need to apply for it yourself. Sole proprietorships, they need to apply for it for themselves. And what do you use to apply for that is the information from the previous year's history. Anything to add, Mark?
Yes, these loans are for operating expenses, both fixed and variable. There are 2 restrictions on these loans. You cannot use these loans to pay off existing debt, and you cannot use these loans to expand your business. Those are the 2 restrictions on the EIDL loans. I just wanted to add that, Ruby.
Thank you. Let's go to the next slide. Okay, so here's where I'm going to cover the PPP, and then I'm going to talk about the EIDL PPP, where they intersect and where you could get into trouble if you don't pay attention. So the current rate for the Paycheck Protection Program, PPP, is 1% with a term of 2 years. The way it works is you apply for it through a lender of your choice. It's a bank, a financial institute, could be a credit union. And also you have to be qualified first. They're going to ask you if you're a small business, generally 500 employees or less, but it could be up to 1,500 employees depending on the sector. You have to go check that out. And different banks have different rules. It's going to be on their applications, but they're all going to follow the SBA guidelines. Sole proprietors and self-employed and independent contractors can apply for themselves. Actually, they just opened that up, I believe, last Friday. But this has been going on for a couple of weeks. We've already seen some people get funded through this. The regulatory streamlining is that they've cut out this SBA standards no credit elsewhere test. So like if you are trying to take out a loan, a lot of time in the past, the bank would ask you, have you tried to get other credit somewhere else, say a restaurant that a bank doesn't want to, or it's deems as risky and they didn't want to put money forward. An SBA loan might be the way that particular business would want to get started. So they've waived that for this particular program. So you don't have to prove that you've tried for other credit elsewhere. Also, there's no personal guarantee or collateral required for the PPP, and there's no additional fees applied to the loans. So there's not one of those origination fees and all that other stuff. The size of loans go up to $10 million. The loan amount's based on the recent payroll costs. So this is the payroll portion, just like it says in the title, Paycheck Protection Program. And the way that we tell people to figure it out is you look at your wages and salaries of your particular company. For anyone up to $100,000 a year per employee. That's a cap. They don't pay over $100,000 per year, but you take the up to $100,000 per year salary or wages per employee, add it all up for the entire year, and then you divide it by 12. That gives you your average monthly wages that you're paying out as your company. And then you multiply that times 2.5. But you're going to have to be careful to make sure that what you spend out of that, 75% of it has to go towards your paycheck. 75% of the loan that you're given must go towards paycheck. The other 25% can be used on things that they deem are acceptable. And there's a list of that. I think it's coming up on the next slide. Mark, do you want to add anything? You're muted. Hey, Mark,
I'm sorry, just clarifying exactly what is rolled up in what they consider payroll. Payroll is defined as salary, wages, commissions, or other compensation, including cash tips. Also, payment for vacation, parental, family, medical, or sick leave, allowances for dismissal or separation, payments of required group health care benefits, including the insurance premiums. Also, payment of any retirement benefits that are done by the company can also be included in that payroll calculation. And lastly, payroll of state or local taxes assessed on the compensation of any employee. There are some exclusions from payroll cost as well, Ruby. I just want to go over those quickly. Payroll costs exclude any compensation of an individual employee with an annual salary in excess of $100,000. Also excluded from the payroll cost are any payroll taxes, railroad retirement taxes, and income taxes. Also, any compensation of an employee whose principal residence is outside of the United States. So those are excluded from any payroll costs.
Ruby, I would like to add some information.
Please do.
Please keep in mind that the information that you complete on the PPP form, especially when you are like adding the number of payroll, it has to be aligned with the 940 and 941 forms. As I mentioned, Mark, earlier, that information has to be aligned with any kind of a statement of the company that you use to run your payroll. So don't make the numbers, it's just use the information and the amount that is on the 940, 941 forms, taxes, and the statement that the payroll company provide to you.
Excellent points. Thank you. So the PPP, as he mentioned, will be used to retain workers. That's what it's focused on. It's to maintain your payroll or make mortgage or lease payments and pay utilities. And there's a portion of it that may be forgiven, the amount equaling eligible payroll, the mortgage interest, rent, and utility costs incurred during the 8-week period starting from the loan origination. Compensation, as they mentioned above, $100,000 a year, it's a cap. So if you have someone that one of your employees makes $150,000, then you would figure their wages in as $100,000, divide that by 12 for part of your average week monthly wage that you would use in your calculations. So the loan forgiveness is reduced if you lay off employees in excess of 25%, or if you have pay reductions for your staff in excess of 25%. What they're trying to do is give you money to maintain the status quo, what you had going, and if you change that or alter that, lose an employee or fire someone or lay them off and don't bring them back within the guidelines, then you're going to have to take that as a cut in your loan. It doesn't mean they give you the loan, your penalization is that part's not forgivable. You're going to have to pay it back. The loan forgiveness is not treated as taxable income, however. That's really good news. So what they're trying to do is make sure that everybody is as much as possible taken care of and getting their paychecks during the 8 weeks that we are sheltering in place, hunkering down, slowing down, and taking care of ourselves. Can we go to the next slide? Okay, before I start on the emergency bridge loan, I want to tell you, you can apply for the PPP and the EIDL at the same time. What you don't want to do if you do that is you don't want to claim within your operating expenses on the idle, you don't want to claim the wages and the salaries, because that is what PPP is focused on. So if you use them in tandem, it's a great thing, because if you need your operating costs covered, you can get the idle for that. And you can use the PPP for your payment of your payroll. But if you double dip, that's where you're going to run into trouble. Mark, you had some pretty good, strong ways of saying that people could keep a record of things. Do you want to make those suggestions?
Absolutely. I am of the opinion that any of these funds that borrowers receive, they should set up a separate bank account for these funds, because they may be subject to an audit. And if you dump these loan proceeds into a general operating account and you are audited, it will be a complete nightmare for you to try to prove what expenses were idle money and what expenses were not. So I'm urging all my clients to make their lives easier, open up a separate account, dump this money into it, and then if you are ever audited, you will simply turn over the records for that particular account and you will be done.
I think that's excellent advice. Some people have said that they have set it up so that their QuickBooks can do that. I'm like Mark, better safe than sorry. I know that they're going to make you account for everything and show that you spent the money on what you said you did. So why not make it easy on yourself at the beginning? Thank you, Mark. So the emergency bridge loan, and I'm going to lean on Carolina for this a little bit too. On this, the lender must be an SBA Express approved lender. There's a full list online. You can go to sba.gov and I will send you the link for that too. It's under lender match. You can find all kinds of different lenders they have approved and preferred for different types of programs. This is a maximum loan of $25,000. The fees are permitted and the SBA will guarantee 50% of the loan. So that's a little lower than some of the other programs, that 7A and 504, as far as how much they're going to guarantee. So they may require some collateral or personal guarantees on this. The businesses have to be operational as of March 13th of this year, and the proceeds can be used to reopen or have the ongoing survival of the business as its forefront. The collateral, it says, is not required. We're hearing that a lot. Mark, have you heard anything back on the collateral not being required on some of these, or the personal guaranteed? How are they working that?
I've heard on the EIDL loans, there's no collateral for any loan request up to $25,000. In excess of that, they are requiring collateral. Collateral takes many forms. Real estate is, of course, the preferred collateral, but they will look at collateral such as furniture, fixtures, equipment, and sometimes even account receivables. And here's another important thing to keep in mind, that the SBA will take a junior position on any collateral. So they'll take a second, third, fourth position on the real estate. Again, the goal of this program is to get the funds out to businesses to keep them afloat.
So on this, the loan is not forgivable because you're not spending it on the payroll. You're spending it on keeping your business running. And the interest rate for this particular loan is prime plus up to 6.5% with a maximum of a 7-year term. It's a good option for people who actually need money to keep the business going, or for your operational things that are not being covered by the other programs. Carolina, did you want to add something to this? I know you talked about the bridge loan as being a good option for a lot of people.
Yeah, the main purpose of this loan is just to put some cash in the pockets of business owners. And the main reason was because, as we know, EIDL program was a little slow at the beginning, or they were just like receiving all the applications and people has to cover payroll or some bills or some expenses. So this came to the market just to help small businesses with $25,000 if they need to cover payroll for this week or for this next month, or did they have to pay rent until ADL applications can be processed.
Okay.
But you're right, it's like the banks are providing these loans just to existing clients. Thank you. Thank you.
Let's go to the next slide. So here's a comparison and an overview of the specifics of the different programs. Mark, could you take this over?
Yes.
Would you mind doing this? Okay.
All right. There are different qualifications and criteria for each particular program. The most important distinction between the EIDL and the PPP program is that the EIDL program is Treasury direct lending. The funds come directly from the United States Treasury and you apply on the actual SBA website. The PPP program is a 100% federally guaranteed loan that is originated by the actual lenders. Now, one of the most frequent questions I get is, my bank is not participating in the PPP program. What can I do? There are several lending institutions that will accept PPP applications for customers who are not currently have an existing banking relationship with. Those lenders that we've been notified of are Synovus Bank, Bank, OZK, formerly Bank of the Ozarks, as well as of last Friday, online lenders were approved to process PPP applications, including Cabbage, TurboTax, and Intuit. So those are the lenders that folks can go to if their bank will not process a PPP application. Now back to the distinctions between the programs. There are some maximum loan amounts. As you can see on the slide here, for the EIDL, the maximum loan amount is $2 million. Under the PPP, the maximum loan amount is 2.5 times the average payroll costs, and those payroll costs are calculated with the items that I discussed earlier. There are some exclusions, so once again, you need to get with your lender to make sure that all eligible payroll calculations are included in your payroll costs. The EIDL advance is up to $10,000, and I just want to make everyone aware that these are all programs that are in flux. So sometimes rules that were applicable weeks ago or sometimes even days ago are no longer applicable. The advance used to be up to $10,000. Didn't matter how many employees you had, but now they go by $1,000 per employee, I think with a maximum of 10 employees. Ruby, correct me if I'm wrong on that.
Yeah, the maximum is still 10,000, but it's 10 employees.
Correct. All right. And thank you for that. And then the eligible borrower, the application deadlines are listed there. End of the year for EIDL and June 30th for the PPP and March 13th, 2021 for the Express business loan. Eligible borrowers typically have to fall under the general SBA guidelines for businesses, and that's fewer than 500 employees. And I think the annual sales, Ruby, is, I think it's a general amount of under 30 million, but that is divided up by NAICS code. So you have to look up your NAICS code to find out what the exact cap is on the revenue for your particular industry. EIDL and PPP have been opened up for all business sectors and segments as of last Friday. So proprietors 1099s were included. So everyone is eligible at this point. Again, day by day in terms of whether money is available, whether the programs are open. We've got some information this morning that there may be some changes coming, but we do have confirmation that last week Congress is looking at an additional $2 trillion to fund these programs, as well as programs for local governments. That funding has not yet passed Congress, but it is in process from what we know today. So.
Also on the EBL, you have to have a current relationship with your lender. So, because they're going to be looking at your past history and seeing that you're a good business and that you have cash flow, you have potential to be able to pay it back. That's what they're looking at. Next slide, please. So here, let's go over the use of the proceeds, because this is where people get confused. And I want to stress to you that you can use a combination of these different programs, but there are some limitations. So on the EIDL, you can use it for rent, utilities, interest on debt incurred, accounts payable. Some bills could have been paid that the disaster caused you not to be able to pay. Your payroll, rent, utilities, interest on any of this. So that's all listed out under the EIDL. That's your operating costs, basically. Mark, do you have anything to add on that?
No, just the difference in restrictions. The payroll protection program proceeds can only be used for payroll, interest on your mortgage, lease payments, and utilities. But a word of caution there as well. I've gotten a question frequently that where my office is in my home, can I deduct a portion of the mortgage interest and utilities? The answer to that is yes, with a caveat. If you did not claim those same deductions on your tax returns for previous years, be very careful in trying to claim them for PPP now. That could trigger some issues with the IRS.
It's not that you can't, but you probably will get audited.
Correct.
So the express bridge loan, though, is a little different because the use of the proceeds is for the survival and reopening of the small business. So that one's not limited to these other parts. Also, the PPP and the EIDL, the part that focuses on the payroll is forgivable. The EBL you wouldn't be using for that. Carolina, do you have anything you wanted to add?
For the, excuse me, for which one? For the bridge loan?
Yeah.
Oh, no, you cover most of the information, Amar, as well. So.
Okay, let's go to the next one. So here's where we talk about collateral. A lot of people have questions about how am I going to get these loans? Do I have to give collateral? So the EIDL, there's no collateral needed for loans up to $25,000. No collateral. Nice. The EIDL advance is not applicable because it's just a portion of the EIDL, and the PPP, it's waived. It's not required on the express business loans. Again, the collateral only. The personal guarantee, it's a little different. So in the EIDL, there's no personal guarantee for loan amounts up to $200,000. When you get over that, you may have to fill out different paperwork. And it's not applicable for the advance, which was just part of that they were giving to businesses immediately as part of the EIDL application. And it's been waived for PPP, but it may be required for the express business loan. The affiliation with the bank is applicable. Explain that part, Mark. Do you understand the affiliation and why they would be requiring it for different parts?
No, I do not have information on that, Ruby. I can look it up though if you'd like me to.
If you wouldn't mind looking that up, because that's a question
Sure.
that we had come up with someone else that we were talking to. I do understand on the express business loan, they want you to have a relationship with the bank because they're going to be looking at your history and your ability to repay the debt that you're taking out. The no credit elsewhere, they've waived it for EIDL advanced, and PPP, but you may have to prove that for the express business loan. Let's go to the next slide. So what part of the loans are forgivable? The forgivable part of the PPP is up to 100%. Forgiveness of indebtedness to an amount equal to the sum of the qualified costs incurred and payments made during the covered period. So what they're talking about is if your PPP calculations are done correctly and you've taken your wages and salaries up to $100,000 max per employee, and then you've added that up for the year, divided it by 12, multiplied it by 2.5, and then spent 75% of that just on payroll, then you could be eligible for this forgiveness part. The EIDL advance, yes, it's forgivable because if they send that to you, you don't have to pay it back, even if you are denied the EIDL. The EIDL itself is for your operating costs, and so that would not be forgivable, and neither would the express bridge loan, which would be in case you didn't get enough on the other different or didn't qualify for the other different programs but needed money for your operating costs. And the reason behind that is they're trying to make sure that people get their payroll. They're trying to make sure that people get paid and have money to survive on during these times, but it's not their business to make sure that your business is covering the operating costs or making sure that you can pay and be profitable. They can't afford to do that for every single business in the world. Did you see anything else, Mark?
No, I looked up the applicability, didn't find anything. So we have a resident expert within the SBDC, Mark Loophole. So perhaps we can pose that question to him and get an answer back to Stacy by the end of the day or by tomorrow.
Excellent. Okay, let's go to the next slide. So here's where it varies just a little bit, and it may look more attractive to get one over the other. And look at the interest rate. For the idle, it's 3.75 up to 30 years with no prepayment penalty. Still a pretty good rate. So if you're needing help with your operating expenses, the idle is a really good way of financing that, because you could have up to 30 years to pay it back, 3.75% with no prepayment penalty. So you take it out, you can pay it back with a few good months of revenue, then you can pay that off now. The idle advance, you don't have to pay it back. It's forgivable, so it's not applicable. The PPP is currently set at 1%. You would apply through the lender of your choice, and the term of that is up to 2 years. The first year being deferred from when you take out the actual disbursement, but then you don't have to pay back the forgivable part. So the only part that you would have to pay back would be if you did not spend it correctly, if you did not do your calculations correctly, if you took out actually a bigger amount than what you use for your 75% to go to payroll. That's the part you'd have to pay back, and it would be within 1 year after you took the loan out from receiving the loan. That would be when your loan started. Then you'd have that year to pay it back at 1%. The Express bridge loan, though, is prime plus up to 6.5%, so it can be a little bit more expensive, but the term is maximum of 7 years. It's the same as a 7A loan, so they haven't really changed the way that you would pay it back. Anything to add on any of those, Mark or Carolina?
I just want to mention to everyone that please keep in mind that if you are approved for the EIDL program, the first payment is going to be next year. So if you are approved right now on April 16, so your first payment is gonna be on April 16, 2021. And for the EBL program, for the bridge loan, so if you are approved for the $25,000, keep in mind that it's better this than financing operations with your credit card 14 or 20% rate. So if you apply for this bridge loan, for $25,000, you can start making the first payment in 6 months. That's the only thing that I would like to add.
Excellent points. Next slide, please. Thank you, Carolina and Mark. So the path forward is you need to apply for your PPP loan with a SBA designated lender. As we said, it's a lender of your choice. Credit unions are doing this. Mark had a number of different things he listed out there. Cabbage, I heard QuickBooks is doing it. There's lots of different avenues. You have to include your appropriate expenses, your payroll, rent, mortgage interest, and all that into the PPP loan request to be forgiven. And to apply for the idle loan, you would go to the SBA website. Here's a link, that COVID-19relief.sba.gov/number/ advance request included with the idle application. It's at the end. It's on like the 3rd page, I believe it is. And you can obtain these funds to help right now with the cash flow. So how long does it take? I know you're thinking that immediately. So we've seen just with the PPP being opened, let's see, about a week now, week and a half, I guess, they opened the program, and we've already seen some businesses that are receiving funds for that. The sole proprietors and independent contractors that it was opened up to on Friday that are in the system already. I have not heard of any of them getting it back yet, but I'm sure it's being processed. And then for the idle, we've seen people now actually starting to get some of those funds in their accounts. It takes up to, they're saying 3 to 5 weeks for idle. And for PPP, they said 1 to 3 weeks is how long it would take. But I think it varies by the volume. And certainly we can see with the entire nation being declared disaster area in different areas that it's going to take a few minutes to get through things. But you can obtain these funds directly into your account, and the moment that you take the money out or start using it, you just want to make sure, as Mark said before, that you've put it in a place that you can keep really good records and what you use it on, how you spend it. Consider the emergency bridge loan as a lower tier option due to the loan terms because it's going to be more expensive money. And identify some other alternative lending sources or modify your vendor arrangements. That's another good tip on how you can actually save some money for yourself. Look at how you're spending your money. Look at everything. Look at how you can cut your cost and maintain your sales. Maybe even deliver your products or your services a different way to people so that you can still do business. And we have a lot of different ideas out there on our website. Check us out at www.georgiasbdc.org for not just information on the question and answers for the webinar, but we have some other webinars coming up on the path forward, especially for conquering through a crisis. I think we have some in the works on different subject matters. So there's a lot of information out there. Be careful what you look at. Try to trust the same people that you always trust because you know they're going to be trying to take your back. I'm sure that the webinars that you have weekly with Georgia Minority Supplier Development Council have a lot of good ideas as well. Anybody want to add anything? Mark? Carolina?
No, you did a great job covering some complex subject matter, and I hope this will be information that's well received and that people will be able to benefit from it.
The only thing that I would like to add, and you did a great job, Ruby and Mark as well, and thank you GMSDC for the opportunity to educate the minority community regarding disaster loans. And the only thing that I would like to add is please take advantage of the resources available for minority business owners and reach out to SBDC and our consultants because we provide services at no cost. There are CPAs and lawyers charging $2,000, $5,000 for helping business owners to complete the application, and you don't have to pay for those services. You can just receive assistance from us and from GMSDC, Chambers of Commerce. So just take advantage of the resources available for small business owners in the state of Georgia. Thank you.
Yes, Ruby, I'd like to kind of add to that. Yes, Carolina, thank you. We can provide assistance, but we cannot help the business owners fill out those applications.
No one should do that.
Yeah, the reason for that is that there is the section, and Ruby, you want to explain that? The section you mentioned about?
Yeah, there's a section on the application that asks if anyone helped you fill out the information on the loan. And I will say that you don't need that help. You need your own personal information, and anybody that tries to help you with that, I look at it kind of like when you take a flight at the airplane and then they ask you, did you leave your luggage alone for anybody to get a hold of? So they want to make sure that you're maintaining all of your good, credible information and not being taken advantage of by some of these scam artists who want to quote unquote help you, and really they may be just trying to get money off of your business at a time that you need that money. They want a portion of your loan to package it for you. It's not necessary. It's a very simple, straightforward process. I do have some questions in front of us that Emily sent ahead of time, if you wouldn't mind helping me answer. One is, I've applied, what's next? How long does it take to hear back about my application, and when will I receive the funds? So this is a question that I can't answer with one answer. So it varies. One of the things that we've seen is with the PPP, it's a little faster because it's through the bank, but they are not necessarily processing it as quickly as people want it because it's a disaster time. So people during the pandemic need their money immediately, so they feel it and they're like, why don't I get it right now? It's taking 1 to 3 weeks through the bank for the PPP, for the lending institutes. It could take a little longer. I suggest you contact your lender that you already took the loan out with and see if they can give you an approximation of where you are. Sometimes they need more information, so they contact you and ask for more information. As far as the EIDL, it's taking anywhere from 3 to 6 weeks. I'm not sure where you are in that process, but it only started 3 weeks ago. So it makes sense that people are just now starting to get some of those funds coming through. But as far as one straight answer, I can't give it to you. I will tell you that if you have questions, You can check them out online. There's a way to look it up. It's at the SBA website. And one second. So you can email disaster customer service at sba.gov, have your application number ready, and they can give you a progress update, or you can call 800-659-2955. Those are both with the SBA, so you can check on the progress of your EIDL, but make sure you have your application number, as I mentioned. Another question is, if your bank is no longer accepting applications, what other banking options are still available? And Mark covered some of those earlier. Plus, I will tell you that you can check it out online at the SBA website. They have a Find a Lender link that you can use. I suggest if your bank stops doing it, try a different bank. If the banks are all stopping to do it, try Cabbage, try QuickBooks. Mark, did you want to go over some of those that you had again real quickly?
Sure. The traditional banks, Synovus and Bank OZK. On the online platform side, there is Cabbage, there is TurboTax, and there is Intuit.
Mark,
Yes.
Synovus is not receiving applications for
Oh, they stopped?
Yes, this morning.
All right. As of this morning, scratch Synovus off that list.
So
Again, folks, the recurring mantra here is these are programs that are very fluid. The conditions change sometimes daily. So thank you for that update, Carolina.
Okay. I would like to add one more bank. It's a small bank and it's called Pickens Bank. And what I'm doing is just sending this information through the chat because there are two contact information there, Reese Stanford and Gary Reese. So they are receiving PPP application for no current customers or clients.
So I do want to address something that we just found out this morning, actually at 10 o'clock. I believe Stacy mentioned it too, that we did get some information that some of these programs have shut down and that they've run out of money. So what is the answer to that? Well, as Mark said earlier, they're actually requesting more money to be put back in the system, and likely that will be given to them through the different channels. So what can you do if you can't apply right now? You can get your information ready. I would tell you on the EIDL, what they ask you for is your total revenues of 2019 and your cost of goods sold. If you don't know what that is, get with an SBDC consultant. We can help you figure out what that is. Someone else said, well, I can't fill out the PPP information because I don't have what I paid in wages for 2019. I have no idea. Why? Why don't you have any idea? If it weren't for the pandemic, we would be applying right now to the IRS, or actually yesterday, we would be telling them how much taxes that we owe them for the year. So just because they extended the date for you to file doesn't mean you shouldn't have that information. Get the information, get your financials ready, get all of that vital information that you know that you need for any of these applications. To create a strategic plan. Anything that you need is the numbers are telling the story. So get your numbers ready.
Okay. Also, to Ruby's point on the PPP side, the documents that you will need to get ready will be your 2019 IRS quarterly 940, 941, or 944 payroll tax reports. You will also need your payroll reports for a 12-month period ending with your most recent payroll date. You'll also need a list of gross wages up to $100,000 for each employee, including any officers in a company if paid W-2 wages. You'll also need paid time off for each employee. You'll need vacation pay for each employee. Federal family medical leave pay for each employee. State and local taxes assessed on an employee's compensation, and documentation showing the total of all health insurance premiums paid for by the company, including all employees and company owners. And lastly, you'll need to document the sum of all retirement plan funding that was paid for by the company. And that would include 401k plans, simple IRA plans, and SEP IRA plans. So the reason why I went through that lengthy list is that all of those documents are calculated in a payroll expense. And of course, the goal is to get the most amount of money that you can. So make sure you include all of those items in the, have them prepared. So when the program opens back up and the funding is approved, you'll be able to just get your application in its entirety.
Absolutely. The next question is, for the PPP to be forgivable, how do I request loan forgiveness? And will I need to document how I use those funds? Yes. I think we covered that.
Yes,
But
and yes.
Yeah, you're going to need to request it at the end of the year. The request comes from, if you show that you used it for that, you won't have to pay it back. It won't be counted on your income tax. Correct?
Correct.
All right, so will the PPP cover sole proprietors, independent contractors? Yes, you can apply for that. It started last Friday. I have no employees. Can I use the PPP to my advantage? Yes, it covers your wages, your salary. For as the same formula, you need to look at. I mean, most of the time with small businesses, you have a set number of fixed and variable costs that you know you have to cover. If you're a sole proprietor, your biggest one is you want to make money off of that. You want to have some income. So you should have those figures ready. Get them ready. Small businesses should know their numbers. I love this last question. Leads into what we just been pounding. What crucial information should a small business know in order to speed up the application process? Mark, do you want to cover this one more time? What do they need to know going forward, those vital pieces of information they're going to need for the loan? And then let's also talk about what crucial information you need to look at to do your planning, because I know you're a ratios guy and it's all about the numbers.
Correct. Sure, I'll be happy to go over that list once again and what they need to apply. You would need your 2019 IRS quarterly 940, 941, or 944 payroll tax reports. You would need your payroll report for a 12-month period ending with your most recent payroll date, which reflects the following information: gross wages up to $100,000 for each employee, including officers, if paid by W-2. Your paid time off for each employee, your vacation pay for each employee, family medical leave for each employee, state and local taxes assessed on an employee's compensation, and documentation showing the total of all health insurance premiums paid for by company owners under a group health plan. And you should include all employees and the company owners. And lastly, document the sum of all retirement plan funding that was paid for by the company, including all employees, company owners, for their 401k plans, simple IRA plans, and SEP IRA plans.
Excellent. So, Mark, you work with a lot of businesses, and Carolina, you do as well, looking at their finances. We have a number of tools at the Georgia, at the UGA SBDC, and we can pull financial data on businesses in your same NAICS code, like size them, and look at what your ratios are. How important is that in not just now, not just for this moment, but every single day of doing business? How important is that, Mark?
It's very important. Moving forward, and I'm a forward-thinking guy, just like you are, Ruby, in terms of strategic planning. And our economy will likely look much different post-COVID-19 than it did pre-COVID-19. So it's really important now to look at, take a good look at strategic planning, look at your marketing, look at your operational expenses to see where you can potentially save some money, conduct an HR review. All of those things are going to be critically important and will determine how well a company does post this crisis.
And Ruby, regarding ratios and financial data, it's very important that they understand the historical data. When I'm saying it's historical data, I'm referring about financial statements and all the records that they have under the balance sheet and the P&L. And that's basically the way, if they have that historical data, they can create financial strategy to prepare themselves for this crisis. So it's very important that first of all, that they understand what is on their financial statements, how to interpret that data to create financial strategy that will help them to improve cash flow and create financial strategy.
So Ruby, I'm going to jump in here as we're wrapping up. First, I want to thank you, Mark and Carolina, and being and facilitating and leading this great information. Before we wrap up, I want to make sure if there's anyone who has a question that has not been answered by the presentation today that is critical for you and the success of your business, can you unmute and ask that question now before we wrap up?
Hello, my name is Daryl Pickett with iCode Healthcare Solutions. We've been in business. We have, we know our cash flows. We know our cost of goods sold. We have operation expenses, but we do not employ W-2 employees, but contractors. We will see a slowdown in the, we will see a slowdown in the business of customers coming for training. So we will be able to utilize a loan, but what programs are best for us? Hope that came out clear.
So are you talking about what loan programs is the best fit for you? Is that your question?
Yes, that is my question.
So if you don't have employees and you only have contractors, are you an employee or are you just receiving distributions or paying under a 1099? How is your situation?
So we don't actually draw anything from the business. It's a nonprofit. We provide training and we just pay our contractors.
An example.
So if you are a nonprofit organization, the only option that you will have is the EIDL program, because I don't think that PPP is available for you. So my suggestion, and if you don't mind, if you send me your contact information, I can send you the nonprofit center contact information so they can help you through this, because they are focused on nonprofit organizations.
Also, SCORE is helping out with nonprofits as well, because they had a number of questions about the EIDL, the EIDL. The EIDL does cover some small faith-based nonprofit organizations, but it's imperative for you to probably get a little bit of guidance, and we don't do that because we only deal with for-profit businesses. But SCORE and the Georgia Center for Nonprofits, and we have a handout that we can send as well.
Yes, and answering your question, the only option for you is going to be the EIDL program, and the interest rate for you is going to be 2.75. Just send me your contact information, and I'll make sure to send you the guide for nonprofit organization. Okay, thank you.
Any other questions?
Great. Hearing no other questions, again, thank you so much. All of our folks that participated, there'll be additional information that will go out referencing the presentation, as well as links to the SBDC network, and additional information as referenced by Mark, Carolina, and Ruby. So again, thank you, everyone. Please be safe, stay healthy, and enjoy the rest of the week.